Hi everyone, welcome back to Corporate Decoder, the place where we dissect complex company filings. Today we are diving deep into El Pollo Loco's latest quarterly report. It's like trying to understand why your favorite fast food chicken is suddenly costing you more. Spoiler alert, it's a little spicy. First, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below to chat about these reports. This is El Pollo Loco Holdings report on Form 10Q for the period ending in March of 2025. This report gives us a glimpse into how the company has been performing financially over the last 3 months. Right away, let's check out the financial health of El Pollo Loco through their balance sheets. Their cash and cash equivalents, the amount of cash they have on hand, is at $4.3 million, increasing from $2.4 million at the end of last year. This is a good sign showing they've increased their liquid assets. However, digging deeper, we see their revolver loan, or the amount they can borrow on their line of credit, is at $73 million, up from $71 million. This indicates that while they are holding more cash, they are also taking on more debt. Now let's switch gears and take a look at their income statement, which shows how profitable they've been. Their total revenue is up a bit, $119.1 million compared to $116.1 million the same time last year. Not a huge jump, but growth nonetheless. The real story is in their net income, which is their profit. It's down from $5.9 million to $5.4 million. Even though they made more money, their profits decreased. Let's see why. One of the main culprits seems to be food and paper costs, which are essential to their business, but take a big bite out of profits. Another expense that increased was labor and related expenses. Higher wages mean less profit. This ultimately leads to a decrease in net income per share to shareholders, although ever so slightly. $0.19 compared to $0.19 compared to $0.19. How are things looking in terms of cash flowing in and out of the business? Let's check the statement of cash flows. The net cash provided by operating activities, which shows how much cash they are generating from running their business, decreased from $11.1 million to $4.7 million. That's a significant drop. They also spent less on buying property and equipment. This likely means the company had smaller than expected investments. Payments on their revolver loan, that is the money they owe the bank, decreased from $4 million to close to zero. This means El Pollo Loco is spending less money paying back to the bank. This paints a clear picture. El Pollo Loco made more money, spent less on investing, but the profits are taking a hit. One key detail to note happened after the quarter close. This is known as a subsequent event. The report states they borrowed an additional $2 million on their 2022 revolver, resulting in outstanding borrowings of $75 million in May. This suggests that cash flow problems are ongoing and that they need this extra boost in capital. Okay, let's get into some of the more vague yet potentially impactful changes that might affect El Pollo Loco's future reporting. The report notes some new accounting rules about how they will need to report income taxes and expenses. It is unclear what effects these changes will have. What is El Pollo Loco committed to? Well, like all businesses, some legal claims and purchase commitments. Nothing out of ordinary here that could meaningfully impact business. Now, here's something that might interest investors: share repurchases. What's that? Think of it like this. A company buys back its own shares on the market, which can drive up the price. For the last quarter, El Pollo Loco repurchased close to 160,000 shares of common stock for $1.8 million. This action is meant to show faith in their stock. As a single chain restaurant, El Pollo Loco only has one operating and reportable segment. It's interesting to note that income from operations actually decreased. Lastly, El Pollo Loco recognizes there is heavy concentration of risk. Most of the revenue comes from the greater Los Angeles area, more than 70%. Any hiccup in this market hits El Pollo Loco hard. So what's our take after digesting this report? El Pollo Loco seems to be at a turning point. While revenue is slightly up, increasing costs, especially labor, are eating into profits. The decreased amount of cash from operating activities and increased debt levels signal some financial stress. Their geographic concentration in Los Angeles adds another layer of risk. However, they are taking steps to address these challenges, like managing menu mix and trying to improve productivity, but it is unclear whether those changes will lead to long-term sustainable growth. Ultimately, El Pollo Loco's future hinges on how well it manages costs and expands beyond its core market, all while maintaining brand loyalty. Alright, that's our breakdown of El Pollo Loco's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.